Good morning, America. Welcome to Taxes Made Easy. And we've got a lot of stuff to cover today. It kind of feels like the calm before the storm. We just got hit by a nasty storm with hail and everything yesterday. And, I can try to watch TV and anything. There's so many ads. It's just like a flood of information. So, like most Americans, I just can't wait till this is over. Um, but we've got a lot of information, some about the election, some about different propositions that are out there. There's so many all across the board. And we're just gonna dive into some of the bigger ones that are gonna affect us across the country. But our topic for the day is gonna be about helping businesses understand sales tax. So that is a big thing if you sell anything, if you're doing anything but a good or if you're providing any kind of good. So we'll be right back after this commercial break. Welcome back, everybody. We've got a lot of news to cover, a lot of stuff happening over the weekend, and again, getting ready for tomorrow. I'm gonna try to stay out of the politics of it, focus on what's clearly affecting budget and the economy, and our personal wallets. So again, just so tired of the ads. Can't wait for it to be over. And tomorrow I'll be actually working the polls with my wife, who's been a regular volunteer, and she volunteered to me this year. So I get to do that for the first time, and I'm looking forward to it. Good to be involved and a good citizen, which we try to be. So moving into the articles for the day, our first one is actually from the IRS. Not a lot of news, but something to be aware of that again, every single year, um, 401k limit increases go up. IRA limit, they didn't change that. So it's still at 7,000. But again, if you're not maxing out your 401k, IRA plans, you should be. So again, just be aware of how you can invest that. Um, and then there's other catch-up contribution limits that you can look at this article and dig into the difference here. So there's other small changes as you go through that. So just an update on changes for 401ks, IRAs, planning for our future, which again it's difficult to do today in today's economy, but we should definitely be trying to do that. So the next article, over the weekend, TGI Fridays. Again, a lot of restaurants have been struggling. They're filing for bankruptcy to restructure. They're not closing everything down, but they are closing down a significant number of stores. So um, they're saying 39 of operated stores would remain open. And how many stores do they have? It's again, they've already closed 12 and shuttered 35 other restaurants, and sold some of them. But right now, Open operates 461 restaurants in 41 countries. So that's a huge chunk. If they're only keeping 40 stores open, or just under 40 stores open, that's a huge number. But a lot of these restaurants are struggling now. People aren't going and hanging out. Um, people are being tighter with their money just across the board. And so not only is it affecting TGA Fridays, but it's also affecting this next store as well. Wendy's is closing another 140 restaurants by the end of the year. They opened 500 new restaurants over the last 2 years, and going back, so 140 underperforming locations, um, as they're restructuring their restaurant footprint. And this came out the other day. So this isn't as bad of news. They opened 500, they're going back by 140. Um, I think this is kind of normal restructuring. But again, more volatility in the news. So going to jump and change topics a little bit when we go into You know what? Before we do that, I'm going to jump into another article. Actually, that's not the one. California's Prop 33 explained. So, rent control has been deemed the quickest way to destroy a city. Now, this proposition that people are going to be voting on probably will pass in California. It doesn't enact more rent control. It allows all the cities, it takes a lot of the restrictions off of rent control. So currently, cities are limited as to which kind of residences over control they can limit, and they're also limited to how much they can restrict. And so it's 5% right now plus inflation, so for a total of 10%. So that's the most a landlord can raise rents right now. By getting rid of these restrictions, it addresses rent control, or at least how much authority local government has over rent control. So by getting rid of these limits, it's going to allow cities across or counties across California to enact stricter rent control. So again, here's the issue here. Back in 2018 and 2020, they Gavin Newsom signed a law limiting annual rent control increases across California to 5% with inflation taken into account. However, um, there are still limits on local laws. So, so this is the third time in 6 years that a push to let local governments have more power and control has failed to pass. So, will it pass or not? We'll see. Do you want more rent control? It kind of goes back and forth, rent control, while making it cheaper for those already in a renting situation, tends to make it more expensive and decrease the quality of rent. So, next article here is about mortgages, which directly impact rents. So, when they say they lose 33,250 in purchasing power, it just means mortgages are getting more expensive as the mortgage rate goes up. So mortgage rates exceed 7%. So they're saying because of this, things right after the cut or right around the cut, they actually anticipated the cut. So just before the Fed's cut rates, the rates had dropped down closer to 6%. And then they went up to 6.2, 6.4. Then last week they're up to 6.57, and then they've gone up again. So again, just kind of walks through how does that affect people. So they're saying home buyers in a 3,000 monthly budget. So that's all they can afford is 3,000 a month for a home. Can afford a 442,000 home at 7%. A few weeks ago at 6.11%, which was the low. So that was on September 17th. They could have purchased a home for 475,750. It just leads to a tightening of the market. People don't have enough purchasing power or less purchasing power. Back in April, the rates peaked at 7.5%, and mortgage rates just new mortgages dropped like a rock. So there's a very short window of rates that were closer to 6%. Now we're closer to 7%, and again, it just means another $200 in monthly payments. So again, this might be temporary. It goes through some of the possible reasons for that. The economy's doing better. It's not. Jobs number would look better. They just came out with a pretty bad one on Friday, where there was only, instead of 113,000 jobs, there were only 12,000 new jobs created. So it's just it's almost like a guessing game. They're trying to figure it out. And again, the main takeaway, like always, look for a home that you can enjoy. We don't know what's going to happen with the rates. If you need to purchase a home, rates who knows where rates going to be after the election? They could go up, they could go down, but it's going to be an issue. So the next article kind of goes along with this. Going back to California, Kamala Harris voted. Good for her. And she voted by mail. And question is, they didn't answer if she voted for California's crime measure. It's a real sticky position. I don't blame her for not answering this. Where did she personally vote on a different proposition? California now has Proposition 36 um, to reverse a lot of the portions of Proposition 47, which was passed in 2014. So this Proposition 47 was to reduce the prison population by lowering certain drug possession and theft charges from felonies to misdemeanors. And what happened? You got a lot more crime. So it's 10 years ago this happened. Crime has gone up in California and by substantial amounts. And so they're going to hopefully reverse that and reclassify a lot of those crimes as felonies and put some teeth back into the law. Again, there's people on both sides of it. If she says she's going to anger people no matter which way she voted, and so at this point, I mean, I'm not going to criticize her one way or the other because it is a very, very thorny issue. So next tab, this is just a general. Which states, the top 10 states, this is from a CNBC article, have the highest cost of living in the United States. The highest one is Hawaii. Because it's an island, there's limited real estate, everybody wants to live there because of the weather. Prices are through the roof. Very, very expensive to live in Hawaii. A lot of native Hawaiians have had to move. And so the Realtor.com just came out with their list. Not surprising, Hawaii takes the cake. California, DC, Massachusetts, New York, Alaska is on the list just because it's so cold and everything's so expensive up there because you have to ship everything up there. Washington, New Jersey, Maryland, and Vermont fill out the list. And again, no surprise there. And moving on, just trying to make it through these, and I think we're running short on time too. Last article, and I can just touch on this. If you think there's been a lot of ads lately, you're absolutely right. 1 billion in just the last week. So that's not up until this point. That's just the last week, $1 billion spent in ads. About a third of that has been spent on the presidential race. And we're going to move on because that's just a short little snippet there, and be right back after this next break. Welcome back, everybody. Yeah, sorry if it felt like I was rushing through all of that. Just a whole bunch of information. Didn't really need to dive into most of that. The 1 billion spent at ads. It's just we can all feel it, we can see it. But for the second section, planning to slow down a little bit and really kind of cover some of these issues. And going back to home mortgages, when it talked about the mortgage rate increasing to 7%, I scratched my head. I was like, it was just at 6.57. So what are they talking about? Because when we read articles and when we go through stuff, I try to question what's out there. Does it make sense? Does it sound right? So we're going to jump to, I did some searching as to where are they getting their numbers, just current mortgage rates for today. And 6.8758, mortgage rate, 7.017 APR. So it is up that high. I mean, that's for a 30-year term. From compare rates for the mortgage loan options below. And there are plenty of others that are looking at rates in the 7% now, depending on what kind of mortgage rate you're looking at. If you do, you can do longer ones that get you lower rates, but the average right here is just below 7%. And then with the APR, 7.017%. Now, there are plenty of banks out there, and it's just kind of scary to see things going up again. It's going to be harder for people to purchase homes. But until we really address inflation in a real way, I mean, a lot of people are criticizing the Fed right now for cutting rates like they did by half a percentage point. The economic news coming out in the last month has not been great, and they didn't expect rates to go up when they cut rates. The opposite of what they expected to happen is what's happening. So we're going to jump overseas real quick to see what's happening in England and France. So UK Chancellor Rachel Reeves, this is Labour took power again recently. And what are they doing? They're raising taxes. So they're trying to increase taxes by £40 billion annually. And again, the companies are warning higher taxes could undermine economic growth. This is the exact same thing that we're looking at here in the United States. Do we raise taxes on companies or not? So this is the biggest tax increase in 3 decades in England. And again, they have to repair the country's broken public services with heavy spending. So doubling down on heavy spending and taxing businesses to compensate. So businesses and the wealthy face the brunt of the new tax hikes. And again, they want higher borrowing for investment to speed up the economy from all the way back in 07-09 crisis. And again, so again, the previous prime minister had cut taxes, but without funding them, again, caused some concerns about the bonds. But again, it's the same thing that they're raising taxes in England. We're proposing raising taxes here in the United States, mainly attacking the rich and corporations. And they're doing the same thing in England and France. The question is this a wise move? So again, next article from Bloomberg, France's corporate tax hike, according to this writer, thinks it creates more risks than rewards. So temporary corporate tax hike might seem reasonable to address France's budget deficit, but if you already have high taxes, especially on multinational corporations, it can definitely drive business away. So one of the examples here, LVMH only gets 10% of its revenue from France. So you would think it wouldn't be affected. However, they're paying 50% of its taxes to France. So you do 10% of your business in a country, and then 50% of your taxes go to that country, and it's going up. So it currently is already paying 50%. Will only go up even higher with the tax increases. What is a company like that probably going to do? Pull out. Do less business with France. And again, that just doesn't help the French when companies stop doing business. You get shortages, you get less competition. And what happens to prices? They go up. And so for foreign multinationals, depending on treaties, etc., you also have the risk of double taxation, where you get taxed in your home country and where you're doing business. So it just makes it a bigger issue here for businesses. The current Prime Minister, Michel Barnier, I'm probably butchered that. Again, they're concerned about damaging France's success under Macron. but that's exactly what this very well could do. So again, targeting part of the economy for tax increases is going to affect the whole economy. I mean, it's not like there isn't one sector that just lives in a bubble that going after them isn't going to affect other individuals. So again, that's a big thing that's on the ballot. That's whether or not we raise the corporate tax rate or cut it is definitely a huge difference between Harris and Trump. The question is, how do you pay for it? And that's been my biggest concern. It doesn't matter how much, whatever tax plans that come out, unless we cut the federal budget like crazy. We're spending over $2 trillion this year alone, and that's where we've been on track. $2 trillion over what we've been making. So it's unsustainable. So we got some insight here onto what they're talking about at the Madison Square Garden. Elon Musk hinted that he could cut $2 trillion from the federal budget, but there were no details, which drives me nuts. Great, you say you want to do this, but where are the details? Where is the information? And so one of the persons that's been bandied about as a potential Treasury Secretary under Trump is John Paulson. And he's vowing to collaborate with Elon Musk to make this happen. $2 trillion in cuts. That would be amazing. Now, everybody that gets a cut is going to squawk and scream and hoot and holler. But if we can cut spending down to our budget, at least balance our budget and start getting ahead a little bit on our debt, would be huge, not only for future generations, but for plenty of programs, Medicare, Social Security. And the reason way to do that is you have to control spending more than anything else. So is this, I don't think it's as simple as what they're saying. There's going to be a lot of other people that are going to get hurt. But the first thing they talk about is $1 trillion for the Green New Deal. I don't think we're spending $1 trillion a year on the Green New Deal. I could be wrong, but there are massive subsidies out there in plenty parts of the economy for electric vehicles, solar panels, subsidies for wind, encouraging people to do these things. And said, why are we taxing the average hardworking Americans to give it to businesses? A car buyer in California or a homeowner in California subsidize the purchase of an electric vehicle. And I agree with getting the government out of subsidies in general, because it inflates, it has creates bubbles, economic distortions, and you're taking money from some people to give it to someone else. So you're hurting someone to help someone else, and we're broke. As a country, we're broke. So why are we doing this? We're spending money we don't need to spend. So getting rid of those subsidies, they're estimating we're spending $1 trillion right there. I don't know if it's that high. Another hypothetical is $150 billion estimated spending by cutting out money allocated for illegal immigrants. The current administration has been spending that much just to fly people into the country. So again, there's all kinds of programs for illegal immigrants, and Trump has made a commitment: no federal benefits for illegal immigrants. So that's another $150 billion. Where would the rest of it come? So again, just bringing in the cost cutter. I think there's plenty of ways to cut. There's plenty of waste, but to cut another $850 billion is going to hurt. There's no question about it. It's going to hurt. But is it what needs to happen long run? I do feel it absolutely needs to happen. It's the only way to get America back on the right track financially. And I blame Democrats and Republicans And the thing is, they want to make all these cuts. You have to have Congress that's going to go along with it. I don't know if a GOP Congress is serious about cuts. They talk a good game, but when it actually comes to it, look what they've done with the House majority. They haven't done anything. So it all depends on what happens with the Senate, with the House, and with the presidential election, of course. If this could actually happen, they're talking a good game. I'm not going to believe it until I see it. So I get it. I think is getting rid of subsidies in general, and also bring down the costs of regulation and the number of regulations. That's another big part of it. That's the first thing Trump did when he came into office the first time, cut regulations, but you across the board. And that's another way to bring down the cost of just complying with all these government rules. That is a huge expense that businesses deal with. So, last article, and this is just a general, broad overview of the economy. This is from the Epic Times talking about the GDP has a problem. Now, GDP came in for the third quarter at 2.8%. Technically, it slowed down a little bit, but that was enough to say, hey, the economy's doing well and things are moving along. Should we buy into this? Here's the problem. It's pricing. Daily shock at prices. Inflation does not account for inflation. So it's not that we're producing as many goods as you would think. It's that the prices are just higher. So ironically, you could be producing the exact same number of items, the same amount of goods, and if it costs more, they'll say, oh, look, the GDP went up. Even though there was no increase in production, there's no increase in real wages. And he goes through and he talks about a bunch of different things, having a pant, buying blueberries. And so they're always reported in real terms. And that doesn't happen. So the GDP is supposed to be report adjusted for inflation, but with everything that goes into it, factory orders, retail sales, always reported in nominal terms. So the information going into it is distorted. So when prices go up, the data reported shows higher sales. And if you're not actually increasing the goods, but just more expensive, it's just inflation and nothing more. Do we actually know what the real inflation number is? No, because the government is distorting those numbers. We're not looking, housing, gas, some of the biggest things, energy, some of the biggest numbers out there are very distorted. So do we know what actual inflation or a reasonable approximation of it is? Real inflation is probably well above 2.8%, especially over the last few years when you take the last few years into account. Housing is still going up. Rents are still going up across the country. Property taxes are going up. Insurance is higher than ever. There's all kinds of things that are still going up. So when you look at actual inflation, which we don't have a good number for, that means that GDP growth is probably negative. So, and then there's also shrinkflation, that everything has been magically shrinking, and then you can't, there's added fees, the added expense for everything that you have to do. So this article really dives into this is the numbers they're looking at. So since 2020, coming out of COVID, we had a huge boom, and then it leveled off, dipped negative for a little bit, and then it's been around 2%, 2 to 3%. But if you look at the post-war period, we had very high growth. It went down, went up, small depression, but went back up through the 50s and then the 60s. And then overall, it went up and went down, but average is much higher than what we're averaging right now. So again, another inflation index giving us an idea of what it is, the economy. So 1%, between 1% and 2.8%. It's gone up, gone down. This year dropped in September, and now it's right back up. So, and it goes back into the Fed trying to get rid of inflation, but something that hasn't been reported very well at all. The banking system added another $1.1 trillion to the US money stock. The lag time between that and more inflation is 12 to 18 months. So if you do it in your last year in power and just put out another $1 trillion, it makes you get the initial sugar high or whatever, inflation high, and immediately it makes the economy look a little rosier, but really it's where you're um, treating someone with poison. It might make them a little more flush, might make them better in the short term, but long term, you gave someone a huge jolt of energy drink or something like that, and down the road, it's going to cause a lot more damage. So again, by doing a lot of things that could really hurt the economy and hurt individuals and businesses. So what we really do need is sound economic policy moving forward. We need sound economic policy for our country, but also especially individually. There are people thriving in this economy, and how are they doing it? They're doing all the right things. They're saving money. They're getting rid of debt, or they're eliminating it altogether. They're taking advantage of higher interest rates rather than paying. And so, unfortunately, our government and our economic policies, both sides, tend to discourage investment, tend to punish people that actually do save. And again, it's the opposite of what we want to do. So we're going to switch gears here and really focus on our topic of the day, which is sales taxes. So if you're operating most businesses, this is the gorilla in the corner, sales taxes. Um, it's comparable to payroll taxes. If you don't pay your employees, it's a lot of trouble there. If you don't pay your sales taxes, it's a good way to have your business shut down. And again, you're going to owe personally for those taxes as well. So whenever you go, first thing when you are considering starting a business, you need to check out your local regulations, see what kind of sales taxes you need to pay, and get your business set up, not only with the state, but talk to a CPA, local CPA, make sure you're meeting all those sales taxes. And we're going to dive into this after this next break. Welcome back, everybody, for the final section here. And going to really dive into sales taxes. What is it? Who's charging it? And again, anytime I left off talking about anytime you open a business, anytime you're planning to open a business, you need to take sales taxes into account. So it's something that affects almost all business owners. Now, just because you provide a service, you might think that you're not subject to sales taxes. A lot of companies out there, a lot of states don't charge sales taxes for services, but it varies by state. So don't assume that you don't have to pay sales taxes in your state. And I've shared charts before um, about that. So again, you've got to check locally. Sales taxes, we do not have a national sales tax in the United States. So you have to check locally for what your state charges. If you have city taxes on top of that, county taxes on top of that. So it's all local governments, state, city, county, that you have to be aware of. And so talking to a local CPA is the best way to make sure that you are on top of it. You can call your local taxing agencies and make sure that you are prepared for and set up to pay sales taxes from the start. The last thing you want to do is start your business and not be on top of sales taxes. most companies that I see, they get going, they open a restaurant, etc. They know about sales taxes, and the problems usually don't arise when someone starts a business. But you have to have good bookkeeping from the beginning, and that's where I've seen people get in trouble. And I've seen businesses use a family member, or they based income taxes off of sales taxes. They guesstimated rather than getting a professional in their corner to make sure it was handled correctly. So again, this is cannot recommend enough to get a good bookkeeper, get a good CPA, make sure you're doing things right. And it can be a tax preparer, not a CPA. That's up to you. It just has to be someone that's good. And we work with plenty of tax preparers that are excellent as well. So if you need to connect with someone, make sure that you have that person in your corner. Give us a call. We refer people to excellent CPAs and tax professionals across the country, including bookkeepers. So again, we have some excellent bookkeepers that will take care of you. Once you have that laid out, you have that plan in place, make sure you stay on top of it. So not everybody understands. They think if I owe taxes for my business, and there are some taxes that if they're owed for your business and you close your business out, you won't have to pay those taxes. So let me get into those and kind of lay out which taxes you don't have to worry about if you close your business. And I am never recommending people run up taxes in their business. But the number one taxes to pay are payroll taxes, because they can come after you personally, but they can only come after you for half of it. But again, payroll taxes can get very nasty. Sales taxes, they can come after you for the whole amount. So those are your big ones: payroll taxes, sales taxes. And of the two, sales taxes has the most teeth. So if you are in charge of a company and you're not paying sales taxes, you're going to be on the hook for it. So whoever went and opened the company, whoever's name is attached to that company, you're going to be on the hook for those sales taxes. And unlike the IRS, where sales taxes can go away after 10 years, sales taxes can stick around 10, 20. Well, in most states, it's 20 years. And then they can, if it's a big enough issue, they can file additional taxes to extend it out to 30. And I've even seen them still around after 40 years. So that's rare. That's the exception. But again, it's not something that's going to go away. Most states don't like to offer deals on sales taxes. New York is an exception to that. We have been able to get some offer and compromises through on sales taxes, but it's where there's no assets left. There's no way to come after the individual. The sales tax is 10 to 15 years old. The older, the better. So it's been around forever. And again, the business has been closed down for approximately the same time, 10 to 15 years old. There's no income. There's no expectation that the state is going to get anything. And even then, when they do an offer, they do want their pound of flesh, so to speak. So we're looking at a settlement of 10 to 20%. Can be higher lately. Last offer I did with New York, they asked for 25% of the underlying tax, which again, they've been pushing that higher lately. Everybody's short of money. Everybody needs more money with, the budgets being resolved at the end of the year. So if you get behind, so most places, sales taxes, first thing you need to be aware of is that they're filed very differently. Usually, sales tax reports are filed with the state monthly. So these aren't quarterly, these are monthly. They want you to stay on top of it. They want to make sure businesses don't get behind. And there are serious fees and penalties if you get behind. So make sure that you have a good prepare in place. If you're not sure what's going on and you think something's funny going on with your tax professionals, get a second opinion. It absolutely can save you a ton of money to get a second opinion. You have to know what they're supposed to be doing and making sure that they're actually doing it. I can't tell you how many times, and we've had excellent CPAs that we referred to, and they had a health emergency. Life happens. Someone dies, someone retires, they're no longer around, and then they have to go scramble to find somebody else. And that's where we see a lot of issues happen, is where someone has to scramble to find another tax professional. And in between getting the new professional on board or making sure they get a good one on board, that's when the problems start. So to avoid these issues, make sure you have maybe a CPA in your back pocket. Maybe you're talking to somebody else. You can always call us as kind of a second voice as well. And okay, is this what's happening? Is this what they're doing right? We'll tell you what you should be making sure is happening. So again, people that just sit back and say, okay, I'm giving it all to my CPA. They handle everything. Bad move. That's a really bad move, especially with the damage that can happen. And so if you really hate that stuff, you could give it all to your CPA, but you need to sit down with them and say, okay, what's going on? Where are the copies of the returns? I want to see, we should be getting copies of everything that's being filed. So I can't tell you how many times someone couldn't get their information from the CPA. He passed on, they didn't pay him, they got irritated, and they didn't have their records. So make sure you get your records, make sure you get copies of everything that's been filed. And you might want to check regularly with the state to make sure that those returns are being filed. So again, it happens too often where people think things are being filed and they're just not getting filed either. If there's something going on with your CPA, he's not responding, etc., you might want to just call the state and say, hey, what is everything good with my tax account? Do we have any issues? Just making sure, because my CPA is, unavailable or whatever. They could be going through a family emergency, divorce, you name it. Life does happen. We should try to have some grace for each other, but grace only goes so far. Now, next thing I wanted to mention is you need to be sitting down with your CPA not once a year, but at least quarterly. And the reason it should be at least quarterly is to make sure your estimated tax payments are getting filed. One of the things you need to be reviewing or should be reviewing at these quarterly meetings with your CPA is making sure your sales taxes are getting filed and paid. And if you're using a service to do that, you should be reviewing to make sure that the money's coming out of your account and flowing through. I mean, you should just be asking these basic questions. Is everything fine? Is everything happening? Can I see the money flowing out of my account? Trust but verify. You don't have to be an expert. You can rely on their advice, but just make sure it's happening, because in the end, if the CPA messes up or the bookkeeper messes up, whoever you're using, it's on you. It's on your business. It's your tax account. Nobody else is going to get the state or the IRS isn't going to go after anybody else but your company. And it's your livelihood, so protect it. So that's one of the big things that we love doing is we come in, we save businesses, we help them get them back on track. So what do you do if you have a business that is closed down? Oh, I'm actually getting ahead of myself. So what do you do if you owe sales taxes? You've gotten behind a little bit. It happens. Try to avoid it. And their states are very aggressive about sales taxes because this is money you actually collected from your customers. So my suggestion is that money should right away go to a different fund, go to a different account to make sure it's there, it's sitting there when you need to pay the money. Don't have it go into your general account. Right away, just separate that money out. Without question, that money goes somewhere else. If you're struggling, pay your sales tax first, because the last thing you want to do is owe sales and payroll taxes. So just make sure those get paid. If something happens, first of all, you may need to make sure, like always, that you're filing compliant. You're current on all your sales taxes. And the important thing is not to owe moving forward. So if someone owes, you're $10,000 behind on sales taxes, which is a low number. I'm just throwing a number out there. But if you owe sales taxes, The most important thing is that you're current moving forward. You file your sales taxes, your monthly sales taxes to get current, and that you stop owing moving forward. Because if you continue to owe, they look at this and say, look, they're not serious about this. It's the clearest indication that you are going to continue to be a problem and that you're not going to address this situation long term. So stop the damage moving forward. Just like anything else, get on top of, if you missed a few months, let's say you missed 4 or 5 months, you get on track, you make the changes you need to make so that you're not going to owe moving forward. And again, this is monthly, so you can build that history of compliance very quickly, but they want to see you moving forward, not having a problem. And then you have to make sure it's not going to be a problem. Again, like I said, making those adjustments where those sales taxes are just diverted to a separate account right away, doesn't sit in your main account. And again, if you need to pay it weekly or whatever just to get it out of your account, do it. It's not worth the hassle. It's not worth the penalties and fees that you get hit with for sales taxes. So what happens if you owe, let's say the $10,000 you owe back in sales taxes? That's where you can call them and set up an arrangement. They accept payment plans all the time on the back taxes, but they need to know that you're not going to owe moving forward. Again, if I keep saying that, it's because it's important. And it's very common to set up an installment agreement when you vote for a period. The longer you wait, the bigger the problem is and the bigger that mountain is to climb. So you need to show that, one, when you're setting up an installment agreement, their number one concern is the business is viable moving forward. Can this business afford to pay these taxes moving forward? So you show that you can afford it by making sure you're current on your current taxes, and then you have to set up an installment agreement over time, and you can negotiate with this and go back and forth and try to set up something that works for you. But the IRS's biggest, or the state's bigger concern, is getting this paid as soon as possible. And there are states that are a lot more aggressive with wage garnishments, bank levies, etc., warrants, tax warrants, etc., which is this equivalent of a tax lien for the IRS. So you have to engage with them. You have to be on top of it. And a lot of times they're being farmed out. They will be farmed out to attorney general offices or private collection agencies that are very aggressive. So if the business closes down, and I want to finish up with this because we're running out of time. If the business is not viable, you've got to make a serious decision. Do I close the business down? And if you do, those sales taxes don't just go away. So if you're going to pay anybody, pay your sales tax, pay your payroll tax. Those are two issues that can follow you after you close down a business, the two main issues when it comes to taxes. You have to still engage. If you can't full pay it, you can try to get on a hardship case, or you can do a partial pay where you're paying it shows you can afford moving forward. But you have to reach out and set up some kind of agreement, or they're going to come right after you and then hit you with collection actions. So if your business is going down, you think you're going to owe, make a plan. Make a plan beforehand. And sometimes life happens, economy happens, businesses fail all the time. But as you're planning through this, take the last funds of your business and try to pay down your sales tax and payroll tax. It's easier to get rid of IRS debt than state and local debt. Hands down. It's easy to deal with. There are plans if you do have sales tax debt that's been sitting around, you can't afford to pay it, your driver's license is suspended. There are ways to get around that, and more states are being more flexible with releasing driver's licenses. Call us again, get that free advice. There are ways to handle this. But again, sales tax is one of the nastier taxes out there. So again, give us a call at 520-485-7371 or find us at guardiantaxlaw.com. And hope we have a great election tomorrow, and we will see everybody on Wednesday.